What's going on, guys? My name's Emmanuel and welcome to my channel. Benjamin Graham said, an investment risk is measured not by the percent that a stock may decline in price, but by the danger of a loss of quality and earnings power through economic changes and deterioration in management. With that said, guys, today we're looking at GREGGS, which is down over 40% year to date. And according to Benjamin Graham, we need to assess two things. One, has there been a deterioration in the management? And two, we need to decide whether GREGGS will ever recover from the current economic changes which was caused by the lockdowns and Rona. We will also be taking a look at their financials as well as some really interesting recent insider transaction, guys, which I think will absolutely blow your mind. CEO Roger Whiteside has also made some crucial decisions which I think will help GREGGS to make an incredible comeback. So if you became an investor in GREGGS within the last 2 years, you're definitely going to need to stick around and watch this video to the end. Today's analysis is very detailed, guys, so to help you out, I have left some timestamps in the description below. I've also put a lot of hours of research into this video, guys. I even went down to my local GREGGS to record some footage of customer demand for you guys to see. So please, all I ask in return is that you absolutely destroy that like button. And if you do gain some value from today's content, then please hit the subscribe button. I have a ton more valuable content coming your way. With all that said, guys, let's just jump straight into today's analysis.
Right, guys, so as I said in my intro, we are looking at GREGGS today. The ticker symbol is grg.l, and they currently trade on the London Stock Exchange. That's why they've got that .l. Okay, so what's the story for GREGGS? All right, so if you didn't know, GREGGS are a food on the go retailer which offers a range of fresh and frozen bakery products, their sandwiches and drinks. They also offer pastries, their bakes, sandwiches, breakfast, sweets, pasta, salads, soups, everything really. I mean, but to be honest, guys, I only go into GREGGS for their sausage rolls. And if you know about GREGGS, then you probably know about their sausage rolls. I've been banging out their sausage rolls for years now. And the vegan sausage roll that they introduced last year is also quite nice. So if you haven't checked out a GREGGS sausage roll yet, definitely worth popping in, guys. Give it a try. All right. So the question is, how do they generate revenue? Okay, so that's pretty simple. The majority of GREGGS revenue comes from selling its products through its shops, and the shops are in different locations. So I've got in here that it's in travel. So for example, you get a lot of GREGGS on the motorways, on the highways when you need to stop over or take a break. There's quite a lot of GREGGS actually on the M1 now that I think about it, because I travel on the M1 a lot. So every time I stop over, there's a GREGGS there. They're also in towns, so your leisure areas, so your towns and your city centers. And also they are in work-centered locations. So for example, your business hubs. Generally, you'll find a GREGGS, Marks and Spencers, or a Starbucks in the business hubs, all right? So that's where they are located, and that's how they sell their products. They also have franchised shops, operated by their partners, also in the travel and other convenience locations. Okay, so they generate revenue through franchising their brand and franchising their products. Okay, so that's another revenue stream for GREGGS. And as of December 28th, 2019, the company operated over 2,050 shops, which also included 302 franchised shops. Okay, so that's the company profile of GREGGS in a nutshell. Okay, and I think personally that it's an easy to understand business model, and for me personally, it's within my circle of competence. So recently, a company like AMD have been skyrocketing recently, but when I read it, it's a lot. It's a lot to understand for me personally. So the reason why I haven't invested in a company like AMD is because it's outside of my circle of competence. And Warren Buffett was one thing that Warren Buffett says. It says he is an expert in spots He doesn't know everything, but he's an expert in just small spots, okay? And that's what he regards as his circle of competence. So Greggs is a company that I can understand. It's a simple business model, and I would say is within my circle of competence. So let's dig deeper. Let's take a look at their revenue growth and their revenue performance over the last couple of years. All right, guys, so I'm on seekingalpha.com, and this is what I use to assess a lot of the UK stocks. And they've got a bar chart here of the revenue growth for Greggs. And as you can see, between 2015 to 2016, they had a decline in revenue. But since 2016, they've actually been consistent because they generated 1.10 billion in 2016. 27, it grew to 1.30 billion. 2018 grew a little bit to 1.31 billion, and as of last year, where they had their biggest growth, it was at 1.53 billion. So in terms of revenue growth, it actually has been growing steadily since 2016, and that's also reflected in their share price. So if you take a look at Greggs, guys, as you can see, it's been quite choppy, but since 2016 up to 2019, I can bring out a trend line here. So since 2016, you can pretty much see it's been on an uptrend, and that's also because it's been growing its earnings year on year. Now, don't get me wrong, since 2016 to 2018, it ranged between £10 a share and £14 a share. But since 2017, 2018, it's been on an upward tear recently. But as of recent, of course, you can see it's on it's on a massive decline since 2020. But overall, the general revenue prior to the Rona has been up. It's been on an uptrend, which is good. Okay, guys, so now we have a solid idea of the company profile of Greggs, and also we've looked at their revenue growth. I want to remind you of the quote from Benjamin Graham that I gave in my intro, and it's this, okay? Real investment risk is measured not by the percent that a stock may decline in price in relation to the general market in a given period, but by the danger of a loss of quality and earnings power through economic changes or deterioration in management. So I've underlined by the danger of a loss of quality and earnings power through economic changes and deterioration in management. So keep that in mind, guys, because these two sectors are what we're going to focus on as to try and understand why Greggs has been declining, okay? So, right, so let's take a look at the economic impact on Greggs so far. So a lot of the information I got, guys, is from their most recent report, okay? So all Greggs stores were pretty much shut throughout the majority of its second quarter. And that resulted in like-for-like sales, which were down by 49%. And that's led to its first major loss for the company in the most recent years, okay? So as a result of that, it's even more concerning for investors because the loss totaled £65 million, which is actually much greater than the £36.7 million profit that the company reported over the same period of last year. So when you look at their cash flow statement, their cash position is slowly disintegrating, okay, guys? So I also visited my local Greggs today, which pre-Rona used to always be packed. When you would go there will always be queues. However, here's a video footage of what Greggs actually looked like today.
As you can see, guys, this particular Greggs is actually quite empty. You've got one customer in there, but they've taken away the tables where you could usually eat. It's not a good sign for Greggs, to be honest. So as you can see, guys, it was pretty much empty. And as I mentioned in the video, one thing Greggs has done, which of course is trying to maintain social distancing, which was to remove a lot of the seating areas and the tables where people used to just visit Greggs, sit down, have a coffee, eat a sausage and head off. That's no longer available. They've made it where you just walk in, get your stuff and walk out. As you saw in the video, it's pretty much empty.
I was there for a good 10 minutes and there was about maybe 2 or 3 people that actually went into GREGGS. So that's really, really concerning considering that GREGGS used to always be packed, okay? And also, guys, the government at any point really can reintroduce a second lockdown, okay? We've already seen it because previously the Prime Minister had said there'll be no need for another lockdown. However, on Friday, just gone, Greater Manchester and Bradford have also been added to the list of cities in England that are officially in lockdown. And that they're now joining the likes of Leicester. If there was another lockdown, the question is, will GREGGS be able to survive another major lockdown? And with their cash position that's slowly disintegrating, it's a real concern for a GREGGS investor. And if you are invested in GREGGS, it's probably a huge concern of yours that you're having right now. Alright guys, so the second part of Benjamin Graham's quote is that we need to look at the management, okay? What have the management been doing? Have they been deteriorating? Are they the reason why the company is on a decline right now? I don't think so. So let's take a look at their recent quarterly report. Okay guys, so a lot of my research for management was taken from the quarterly report, and I have had some subs get in contact and ask me how you find these reports. So all you have to do, guys, is go to Google and just type in like GREGGS Investor Relations. Once you're on there, just click on the first tab. Once you've clicked on the first tab, it will take you to the investors section for GREGGS. All you have to do is click on Results Center. Once you're in the Results Center, you just go down here and then you just click and open up the PDF and you go through, you can read through it yourself, okay? But I've read through it all and I've got some key points which was in my presentation. So we'll go back to the presentation now. So the first thing they did was all the directors took a voluntary salary reduction. That's amazing, guys. If you're an investor in GREGGS, then you can see that, okay, they're struggling for cash. All the stores were closed for pretty much the second quarter, and you can see that the management and all the directors are taking voluntary salary reductions. That is amazing. For me personally, I think that's incredible. That's an incredible move. It shows that the directors and the management have a vested interest in the success of GREGGS, okay? They also cancelled dividends, okay? I know companies canceling dividends is a bit of a ball ache. It can be annoying, but if you think about it, guys, they're trying to preserve as much cash as possible. And what would you rather have? Would you rather have a dividends payment and then the company declare bankruptcy and then you pretty much lose all the value of your shares? Or would you rather them cancel dividends for now, keep the company afloat, they survive through the whole Rona situation and then start to flourish in years to come? Me, if I was an investor in GREGGS, I would be incredibly happy with this decision for them to cancel dividends for now. They also have a relatively strong cash position, and that's all down to the amazing financial performance that they had in 2019. And they also secured further cash support from the Rona corporate financing facilities. Okay, so that's also a plus. Another key point that management did was they furloughed all their staff. They also managed to successfully freeze all apart from their essential expenditures. Okay, so all of these moves that the management made was to try and preserve as much capital as possible, try to keep GREGGS in a sustainable position. These are the key points that I discovered that management did after reading the quarterly report. And I think, to be honest, these are incredible, vital decisions for the future success and also for the future survivability of GREGGS as a company. So, what is the future for GREGGS? Okay, so I'm going to break it down into pros and cons. Okay, so the CEO, Roger Whiteside, and management have made difficult but effective decisions, in order to preserve the survivability of GREGGS. There's no doubt about it. It's never a favorable decision to cut dividends. It always leads to a market decline, which we've seen recently with GREGGS. Also, the directors taking voluntary salary reductions. It's not going to be great. Of course, they have their own expenses and their own livelihoods they need to preserve. But the fact that they took it on the chin and made that decision, I think, was incredible. Okay, so that's definitely a pro from me. Also, the early trends in demand within the first 3 weeks of GREGGS reopening has been quite incredible. I'm going to take you to that part of the quarterly report now. All right, guys, so we're on page 7 of their most recent report. And this point here is quite critical. It says sales will likely remain constrained under the social distancing measures that they've put in place. And obviously you saw that in my video for my recent trip to Greggs. But this is the key point, guys. Here they said that their most recent weeks, that they're already operating at 72% of their 2019 level. Now, I read a report, and I'm going to take you to that report from Reuters, and the report says it said its shops had reopened by July, offering a limited range of its best sellers to takeaway customers. Sales at the company managed stores stood at 72% of the 2019 levels in most recent weeks. Okay, so that's what I highlighted in the report. Now, so this is the key part, guys, of this article here. It says Greggs, which scored a hit last year with their vegan sausage roll, followed by other vegan snacks, said that it could break even when sales reach about 80% of last year's level. So they are very, very close to breaking even. You know, they're 8% off for them to be in a break-even position, and I think that's a huge plus for the future progress of Greggs. Also, guys, looking at the revenue, as you can see, prior to the Rona, they've been reporting strong year-on-year sales. I think once this whole Rona subsides completely, once there's a vaccine, I don't see any reason why the strong sales for Greggs can't continue, okay? And I think management have detailed a solid 5-year plan, which they have coined the next generation Greggs. So I'm going to take you to that next generation Greggs plan. All right, guys, so we're on page 18 of their reports. And one thing that stood out to me is that, as you can see, year on year, they've gone from 80% high street to 65% high street to 55% high street by 2020. And by 2023, they want to be less than 50% high street, okay? And they also want to have more than 2,500 shops and franchises. And also, you would know Greggs, they don't operate an evening service, so they do want to start doing that. So hot food in the evening. They also want to venture into providing a delivery service, which of course will further boost revenue. And they also plan to include a Greggs reward system. Tesco have their own version. You have BP, they have their own reward system. So Greggs also want to introduce their own reward system, which is quite crazy to think about that they don't already have one, but they should have one because Nando's has one. You know, I've got my Nando's card. But yeah, that's what they plan to do by 2023. And also by 2025, they are planning to go international because at the moment, they are only based in the UK. So I love this plan for Greggs. I think once the whole Rona blows away, there's no reason why this cannot be achieved. And I think if they do venture out international, that's only going to boost revenues further. So let's take a look at the financials for Greggs. Okay, so as we already established early in the video, their revenue has been growing year on year since 2016. And looking at their net income here, guys, as you can see from 2017, they had a net income of £56 million. 2018 was up to £65 million, and by the end of 2019, it's grown to £87 million. Okay, moving on to their balance sheet, guys, and their total cash position is sitting at £121 million. And then if you take a look at their total debt, they have a total debt of £429 million. So they are quite over leveraged at its current position. And even though they are operating at 72%, if they do hit 80% within the next few weeks, then that's great. They don't need to take on any more debt. But if the situation gets worse, they're going to need to take on more debt to stay afloat, and this debt might increase. So they're already over leveraged as it is. And as you can see, guys, their current ratio as well is sitting at 0.61. And if you've watched any of my previous videos, you would know that I consider a current ratio of between 1 to 2 as safe. And anything over 2 is even better because that means that their total current assets outweigh their total current liabilities. But in Greg's situation, their current ratio is lower than 1, which means that their total current assets are less than their total current liabilities. And this puts what I'm saying into context, guys. Their total current assets is sitting at £142 million, whereas their total current liabilities is sitting at £208 million. So their current ratio is a lot less than 1, Taking a look at their stockholder equity, guys, this is a positive because their stockholder equity has been increasing year on year, which is an indication that their total assets are still growing much faster than their total liabilities. And lastly, guys, we're going to look at their cash flow statement. And I always like to look at their free cash flow because that's pretty much the bottom line for how much cash they have left. And they have been growing it year on year. But Yahoo Finance hasn't updated their most recent quarterly cash flow position. So even though it's in the green at the moment, which is a positive, you definitely have to go into the most recent report to see the damage that's been done on the free cash flow from their second quarter. Okay, guys, and another interesting pro for me is if you have a look at the insider transactions. Okay, so to do that, you just go on Yahoo Finance, you type in GREGGS, and we were in the financials before, but all you have to do is click on holders, and once you're in holders, click on insider transactions, and then you scroll down and you'll see the insider transactions. So we have a familiar name here, guys, and look, we've got Roger Whiteside, and if you remember, guys, he is the CEO of GREGGS, and on the 6th of April 2020, he bought 120 shares of GREGGS, and he bought it at a price of £18.38. So it's crazy. So GREGGS right now is what, at £12? So he's down in his position. And even look at this, guys. On the 25th of March, the CEO, he bought 11,000 shares of GREGGS, and he bought it at a price of £18.89. That's crazy. He must be down what? Let's work that out then. So he bought at £18.89. Alright, guys, so I'm back on TradingView, and I think what the CEO bought at £18.89. So he is currently down on his position by 31%. So the CEO himself is down 31% on his position in GREGGS. I guess that's also another incentive as to why he's trying his hardest keep the company afloat. So the CEO has some skin in the game, and that's going to give investors even more confidence. Now, guys, moving on to the cons, and really the only cons I can see with GREGGS is that they are at the mercy of a second lockdown. You know, if there is another lockdown, especially if it's a national lockdown, I really don't know how GREGGS are going to be able to survive. And I think because of that reason, that is a major fundamental reason for why there is so much fear amongst investors, and a lot of them are selling off their shares because of that fear. Okay, I've said this quote multiple times in multiple videos. You know, it says, be fearful when others are greedy, and be greedy when others are fearful. You know, that's said by the legendary investor Warren Buffett. In a time like this where there's so much fear and GREGGS is down by over 45%, is now the time to be greedy? It's tough. It's a tricky decision, guys. And for me personally, my conclusion is I am going to start investing in GREGGS. I think what really won my heart was the voluntary salary reduction. I thought that's incredible. And this is a leadership, this is a management that want GREGGS to succeed. And that convinced me. But remember, guys, there is a lot of risk with investing in this company. If there are more lockdowns or a national lockdown, you know, I don't know if a GREGGS will be able to survive, and then you could potentially lose all of your money. So bear that in mind.
Peter Lynch famously said, everyone has the brain power to make money in stocks, not everyone has the stomach. It's going to take a lot of guts to remain as an investor in GREGGS, and you're pretty much betting on the UK economy returning to some level of normality with your GREGGS position. I purchased my first set of GREGGS shares at around £11.93, and I do plan to add to my position if the share price drops to about £11.50. But at the end of the day, guys, make sure you do your own due diligence and your own analysis before you decide to invest in any company or in any stock. Remember, guys, I am not a financial advisor. I just love researching and talking about stocks. All the links to help you with your investing journey are in the description below, and I've also included some books that I highly recommend. Plus, my broker Trading 212 will send us both a free share if you sign up using the link in the description below. With all that said, guys, don't forget to smash that like button, hit the subscribe button and the notification bell if you want to see more content from myself. Thank you so much for watching once again, and I will catch you in my next video, guys. Peace.